All right, so let me say hello and welcome to each and every one of you. Doug here with the linklist.com. I want to welcome you to another daily edition of Stock Market Mutterings. As you know, I always say I will do my best to take a grope in the murkiness, try to make some sense out of this market, which could be a challenge at times, could it not? And try to give you some quality setups. Try to help you with some trades. Try to make you better. And some of the stuff we've been talking about lately, ROKU, LULU, Tesla, NVIDIA, some big trades. But I got a special lesson here for each and every one of you that I want to talk about first. And that is, this is why I stopped shorting stocks. It was like for today. Today is a reason why a couple of years ago, I just stopped shorting stocks. Now, some of you might just know me now for the first time, or maybe you haven't followed me for very long. I know there's a lot of you that's followed me for a really long time, and I've been on the stream here like with YouTube, Twitter, and all that for over a decade. I've done this service. I've been trading professionally now for 22 years. So most of you remember that when I first came to social media and I first started my service, basically up until about 2016, I was primarily a short seller. Probably one of the more well-known short sellers back at the time. Like I just, when I say well-known, I mean just I shorted everything. Every single day, 95% of all my trades were shorts. And I made a handsome living. In fact, I have made 10 times more money shorting stocks than I ever had buying. I found a great strategy. I found a great way to work it. And it worked really well for me. In fact, like 2008, when I went through that crisis, that's what really set me up. I mean, I made a lot of money during that, and I learned those lessons from 2001 and 2 and going through all of that. But I had a specific strategy, and just to kind of give you an overview of what it was like, I would just look for stuff that was up the most during the day. And I would not earnings related. I always say no earnings, no specific news. I don't really mess with that. Don't do the penny stock thing. You know, I did do my shorting at penny stocks at one time with like Gene, PHT, VLTC and stuff like that. I've had my fair share of those, but I mainly pick larger, bigger, completely liquid type of companies. And I would wait for about 15 minutes, 30 minutes, and I'd pick some good ones that just kind of went really vertical. And they had a lot of speed to them, a lot of aggressiveness to them. And I'd wait for these slowdowns, which I can show you here in a little bit. It's not a strategy video. And I would look for like great resistance areas, and I'd start working them off of there. And I did really well with that. But somewhere along the line, I think it was like 2016 or something like that, things started to change, especially in 2017. And I don't know if it's necessarily, it's an algo thing, market becoming more computer generated, but what had happened, the first signs of it were that stocks no longer pulled back. There used to be this rhythmic flow, I like to call it, in the market, where stocks went up and down, and they still do that. But in the course of a day, you would get stocks that would go up, then they would pull back a little bit, then they would go up again, then they would pull back, and I would ride those pullbacks, and sometimes I would buy the dips. But then we got to this thing that we call the rampant camp, where stocks just started to go up and flatline. And I'm going to show you what I'm talking about and show you from my viewpoint. Now, like I said, when I look back at my career of 22 years, you look back at your life and you say, oh, them was the good old days. Like when you were in high school or something. You go, man, I wish I could go back to them. Them was some fun times. That's how it is with me in shorting. Geez, oh God, I made so much money. Man, I made so much money doing that stuff. But like I say, times change. And I'm going to show you what I'm talking about. Not that it doesn't work now. Don't get me wrong. It still works now. But the lesson I want to have for you too, that I learned so much over the many years, is that you don't get any style points for trading. There's no hero rewards, right? So you don't want to make your trading really hard. Like trading itself in general is hard. That's what I'm saying. It's hard. Trading is hard. But if all of your trades are hard to work, you are doing it wrong. You're on the wrong side of everything. Your trade should be pretty straightforward, to where you get in a trade, it should work within a certain amount of time, and if it doesn't work, you should be out of that trade. It's simply how this game works. If you're working too hard to find good trades, or the trades that you in aren't working and you're trying too hard to make them work with whatever voodoo you got, you're doing it way wrong. right? So once these things became very hard to work and they become hard trades to manage, they became not attractive anymore because I don't want to work that hard for my money. You know, there's easier ways to make money, just like there's easier stocks to long, there's easier stocks to short, there's easier instruments to play. You don't want to make this harder than it has to be. So let me start out with a date. Now, just speaking of it, you guys want to join us in the room, feel free. The link is always up here at the top. It was a profitable day, made some good money, but I want to show you what I'm talking about, why I stopped shorting. It was because what I did today, and I'll show you. Okay, let's talk about this. Let's talk about it so I can at least get it off my chest. I'm going to go to good old TTD. TTD. And this, guys, is the reason why I stopped doing this. Is because, you know, you get to this point where... Now, I want you to understand this first. These are just trades. I'm just talking about trades. That's it. I'm not talking about long-term investments, your thoughts and feelings about the company. I'm talking about trades because I have long-term positions and investment positions and stuff like that too. And sometimes I trade against those, you know, during parts of intraday. If I feel I've got money to be made, I'm going to try to make it. And I try to, like I always say, I try to find the maximum amount of value. And, you know, I love to dip buy, but sometimes I also like to short stuff that's up really high. And if there's a method to it, if there is something there where I feel that I have an edge, I'll do it. And it's not a big loss. That's not the point. It's the frustration is where I want to go with this, because here's a stock that just runs up in the morning. I'm just going to show you this intraday. It just runs up and it's just relentless. Green after green after green. I mean, it's just non-stop. And at this point, it's up like $33 for the day. So one of the things I look for, guys, is an element of speed and range. This is what I talk about. That's something that can't be shown in hindsight that you should always look for. It's not so much the move of a stock, but how did it get there? So the faster something goes parabolic, vertical, or has strength and runs into a resistance zone, the less likely it is to hold. Now, that doesn't mean that by the end of the day it doesn't go back up, but for that piece of time that you're looking at, the next move in that sequence is usually down. Same way when a stock is going down so fast, it will normally bounce radically or strong or violently before rotating even lower. And those are the kind of bounces that I sometimes look for too. So what has happened here, where the difference in the contrast is that most people just do not short. You know, they just simply don't do it. I think there was some statistic out there that says 96% of all the people who've traded don't even short, ever. Like people that have Ameritrade accounts. So it's like, it's not something that some people don't even know about, know how to do, don't understand. So it's not something that's popular in the first place. Also, the market is engineered to go higher. There's so much more love and respect and happiness for buyers, and so much more evil for shorting. So it is naturally more difficult, but it's profitable when done right. But here's what has happened, why I got out of it, because there was some time when there was continuity. And you would get logic, you would get pullbacks to VWAP, to moving average, you would get some sort of sensible retaliation to the bullishness where you could make money. That went out of the way. Whether it's computers, I don't know. That's my thought. It's computers that are controlling it and bidding and ask, whatever it might be, but it just doesn't work the same way. And here's what I'm talking about. This stock, you look in there, it doesn't have very many $30 up days. So you're going to rip $30 here. $30, right? And then it just sits up here with these little tiny pullbacks. And then you start to think, what am I doing here? Now again, the entry points were fine. The money that gets lost is all right. It's not a big deal because stops are at high of day, but it's the frustration that's sitting there like, you're telling me I watched the stock run $33, $34 into significant resistance on the daily, and I open up a short trade on this, and you're only going to pull back 60 cents. That's it. 60. And whoever, whatever, the herd, the crowd, the algo, you're going to buy the 60-cent dip on a plus $34 day? What the hell? Man, what? Come on. Who is greedy here? Who's being greedy? It's like you think a pullback is 60 cents? Oh my God. That's what started it, guys, because it's not just TTD. There was tons of stocks, and they really started this behavior, I'd say, oh man, early. Well, there were signs of this in 2016, 2015, when the bull market really started to stretch its legs out. And there just came this period of time, and I think a lot of people don't understand. It's like, it doesn't have to pull back. It's the absence of sellers. If nobody sells, it doesn't pull back, you know? And that's part of what we talked about yesterday, like with the common sense factor. It's like, the common sense tells you, look, man, if you're shorting a stock and it goes $34 and you're sitting here trying to scrape 30 or 40 cents, what the hell? Why even bother? And that's what I'm talking about. So when I changed my style and moving into more dip buying and focusing on that, it was a product of this. It's like I said, it's not a matter if can I make this work? Hell yeah, I can make money on this. I can short, I can add, I can hedge it with options. I can fight with this thing because I've got the money to, I got the time. I could go to hell's earth on this thing if I wanted to. But that's dumb. That is dumb. You can't do that. And there are easier trades. So when I'm looking at this whole thing, that's what I'm talking about. There are easier trades. Now, I'll take this one step further. This also goes for you guys out there that are struggling sometimes with your trading. Sometimes it's just the stock. Not every stock is a good dip buying stock either, right? Some stocks just simply suck when it comes to trading. There are great swing trading stocks, and then there are great day trading stocks. And sometimes they're both and sometimes they're not, but this is what we want to focus on when we were trading. Is trading itself in general, like I said, is hard. You don't want to complicate the process by making your trades difficult, by trading the wrong stocks, doing the wrong things. And it was like I said, wasn't a big loss, wasn't any more than frustration. In the older days, I would fight with it more, but that's what it's come to, is this point was like, don't even bother doing this. And it doesn't make any sense to sit here and try. And even if you make money, like, say I made $1, like $300 or $400 on the trade, I made $1 gain. So, like, you waited all day, you got in at the very top, the thing is up $34, and it's so damn stingy, you can't even give me one stinking buck. If I'm just looking for $1, I'll go somewhere else. I'll find something else that'll give me $1 easier than this. I don't have to work this hard for the damn dollar, right? You guys follow what I'm saying, right? It's like when people trade Tesla or Shop, the one I mentioned yesterday, Nvidia. You don't trade those stocks for like 50-cent gains. That's not why you're trading that for 10-cent scalps, 20-cent scalps. That's not what that's for. If you want 10 or 20-cent stock, go trade AMD or something instead. You don't need to trade Nvidia. You don't need to trade Netflix. You're just going way. That's not what those stocks are for. They're for $7 to $10 gains. That's what they are for. And that's what you should be trading them for if you're looking for. Therefore, you've got to give up a certain amount of risk. So the same way with TTD, you're talking about almost a $300 stock. There's no sense at this point, just, you're not trading this for 50 cents either. So that's my thoughts. That's been the change of the market. Is there used to be a time where they would go up, like in the older days. This should have pulled back somewhere down around the VWAP 281s. I could have made some money on it, and then it could have re-geared. Now sometimes you see that, but that's one of those things that just kind of stopped happening. It just kind of stopped happening, and that's all there is to it. So lesson. There's a lesson for you. Lesson, because the market is engineered to go up. It wants to go up, and that's what it's going to do. Now, speaking of, I did have some good trades. I waited for the Fed, and then I got some Q futures. Like I said, it's getting to the point where I'm trading futures again because of the volatility. Hi, some really good coin on this one. And this is what I'm saying. Sometimes it's senseless. It doesn't make any sense, but things seem to get more ignorant to the upside than they do the downside. So it was a really good day there. I also had some Facebook that I kept for a few days, but I eventually got rid of it right before earnings. So, that's the way it goes, man. Good day. But here's what we're going to talk about. Here's what I want to talk about. I want to talk about Netflix. Now, Netflix is going to kind of follow along what I was thinking with BABA. And the thought is you've got these really strong stocks that were performing well a couple weeks ago. And then they kind of went through some selling, which is what you want. You want some selling in them, have them back test and really build some levels. So I'm like, just like I was looking at BABA for yesterday, when we talked about last night, was, hey, look, you faded into the gap. Look what happened. You fade into the gap. It held the gap and it took off and it worked really well today. Look at this. Really, really nice performer today. So I'm kind of looking for Netflix to do the same thing. You saw a really big pullback, recent highs, 449.52, coming down to 400 today. Actually under 400, 390.360. Coming underneath of that, then holding up pretty good today. And it looks pretty good. Like it looks like something that's going to trade back up in towards these areas of 431s to 439s. I want to watch this for a good setup because I think these are where the big money is rather than some of these other ones. Now, you're going to have all that surge coming probably into the tech. You had good stuff tonight from Tesla. You had good stuff tonight from Facebook. You're probably going to see multi-day runs on these. Can't see right now just out of just sheer logic why Tesla doesn't go to 1,000. So I would be looking for proper setups in those to get them going. And also this TWTR, I've been talking about this TWTR. I mean, this thing is lining up really, really good. Now, they've got earnings coming up on the 6th. There's still some time to make this trade. If you move, but like right here where it is at 113, we've got a lot of gap ups this evening. But if this holds up well, I like this TWTR moving into 120 prior to earnings. But, you know, this is also a product when I was talking about the shorting as well. This is all the product where we're talking about this new time frame that we're in. And I did the video on this, my trading strategy, switching my trading strategy, added 10 years to my life because my trades are easier now. But, you know, you're in a Fed engineered algorithmic market. You know, we're going to be in a situation here where probably the first time in history that the country is going to be in a recession with 30 million unemployed people and the market's going to be at all-time highs. That's the way it is. I don't control that. As dumb as that sounds, that's probably what's going to happen, man. Anyway, I'm going to leave it there. So here's the game plan for tomorrow. I've been tech heavy in this market for a while, and I want to be that way. Meaning tech heavy is like, you give me some pullbacks, I'm buying them. I am in them. I want them. I want to own them. And that's it for trades. I have a whole different investment portfolio that's completely different from the stuff I'm talking about here, but I want to trade them. Anytime I can get a pullback on any of these names, I just say, you know, Tesla, WDay, Apple, Netflix, LULU, DEC, Nvidia, TWTR. I buy them. BABA, I buy them. I will buy them on a pullback. As long as we're not having a hit piece, some sort of missed earnings, some specific news that's might be whatever, just stay with it. Stay with it. I mean, the dips are strong. What was said today with the Fed, the earnings coming out from your big FANG names. Guys, I can't see how the SPY doesn't just clean out 300. It's going to be over 300 before the end of the week probably. So I'll leave it there. As always, you guys need help, feel free to reach out to us. Support@lincolnlist.com. Look forward to seeing each and every one of you. Thanks for watching Market Mutterings. Until the next time, take care.